Wednesday, November 13th, 2019. Maneco 64, home of alternative economics and contrarian views. So yesterday, President Trump gave a speech about the U.S. economy. Yes, it was a very interesting speech. I will give President Trump some credit to what he's done for the economy. Don't worry, I'm not going to just bash him. But I think it's important to know as well what has happened to the wealth distribution in the United States for the last 30 years or so. I'm going to use data from the Federal Reserve Bank, which in my opinion is the institution that accentuates the wealth inequality alongside the monetary system that we have right now, a debt-based system, fiat currency system that has been unanchored from a sound money system, a gold system. Yes, I can understand why a lot of people want redistribution of wealth, socialism, but that's not what I'm calling for. Of course, there is no perfect solution to this question of wealth inequality. It's always been a problem. It will always be a problem, but I think it's becoming a huge problem in the U.S. The other point I would make is that he spoke at the Economic Club of New York. And I would say the Economic Club of New York is like speaking to the 1% club, right? That's basically what it was. President Trump criticized the Federal Reserve a few times in that speech, but let's see the person who invited him to make the speech there. It was a woman by the name of Marie-Josée Kravis. It might sound like you might sound so what, right? But let's look at her background, okay? So I've heard of this woman before because I've been around for a while. I know that her husband, of course, Henry Kravis, was the founder of Kohlberg, Kravis, Roberts & Co. And what is that? Well, that's the original, probably the first private equity firm ever. It was founded, I think, back in the early 80s, maybe a little bit before that, right? He's worth $6.7 billion, right? But let's read a little more about Mrs. Kravis. This is really interesting. This is the woman who invited President Trump, who's supposed to be, how can I say, against the Federal Reserve, right? Having a fight with the Federal Reserve. She serves on the International Advisory Board of the Federal Reserve Bank of New York and on the boards of Publicis SA and LVMH, right? Since 1989, she has attended all conferences of the Bilderberg Group except the one in 1997 and serves on its steering committee. So I'll stop at that, right? So that's the individual that invited President Trump to speak about the U.S. economy at the Economic Club of New York. Let's have a look as well through the trustees and officers of the Economic Club of New York. I've scrolled through the page right at the bottom here, bottom right. It's funny, they put it right at the bottom right. They don't want you to see it right at the top. You've got a guy by the name of John C. Williams. Well, he's president and CEO of the Federal Reserve Bank of New York, right? So there you go. Let's have a look. We got John Paulson, president of Paulson & Co. Inc., right? Hedge fund billionaire, 1%er, right? Who else have we got? Peter Grauer, chairman of Bloomberg LP, right? Mainstream financial press. So I just wanted to put that through there. So before I look into some data, and I think I won't be able to go through all the data because this video would take a long time, but the more important data and about the wealth situation in the US and what I think is going on. So what do I think is going on in terms of Trump and the 1%, the general public? Of course, the general public is happier about their economic situation, right? This is what I think. guys. I think Trump is there to keep the 1% growing wealthier and wealthier, and at the same time throwing a few crumbs to the bottom 50%. I think that's what he's doing. Is he going to succeed in doing that forever? I don't think so. And why? Well, because the debt situation, President Trump made a lot of claims yesterday that were true, right? About the economy, how it's doing better by the numbers, right? You can't deny that. The unemployment rates, which of course ignores all those people who are not looking for a job. There's still almost 100 million Americans that are out of the workforce. So, yeah, he never mentioned, even though I agreed with a lot of things he said, that he's fighting for fair trade deals with different countries, with China included. And by the way, I don't think it was a great idea to call the Chinese cheaters if you're trying to negotiate with them. But that's up to him, right? He said it was off the record, even though there were 600 people watching his speech, right? One thing he said was that the U.S. workforce, and it's interesting because I noted that before he said that the numbers had just come in, that they had changed. He said the U.S. workforce is the highest ever, and it's almost 160 million. And it's interesting because I was looking at the U.S. debt clock a few weeks ago, and I made a video about this, and it shows the U.S. workforce, right? And I noted that in 2000, the U.S. workforce was higher than it was at the time I did my video, maybe a couple of weeks ago. It was 158 million, 146,000 in the workforce. I think now, back then, we were just below the 2000 number. So lo and behold, now the U.S. workforce number has been revised and it's above the 2000 number. It's at 158,574,000. So it's interesting that he got that data changed just for that speech. So just wanted to put that through. And yes, things have improved, and I'll come to the data in a minute for the bottom 50%. But they've improved even more for the top 1%. And you're going to see these numbers are amazing. It's provided by the Fed. I'll give you the link to their page. You can play around with all the statistics, all the charts, all the bars, all the comparisons. It's really good. It seems like the Fed is proud to show how inequality is growing in the U.S. So yeah, one thing he didn't note at all was the debt. The debt that keeps growing, right? Didn't mention the fact that the Fed has had to actually pump in hundreds of billions for his friends, the one percenters, right? Through the repo market. Didn't mention that the Fed is actually doing QE again, even though they're not calling it QE again, providing another 60 billion, right? So we'll forgive him for that. But that's what I think. He's playing both extremes. And they are extremes. You've got the 1% who control a massive amount of the wealth. I think it's almost up to 32% now. And you've got the bottom 50% control 1.9%. Yes, you heard it, 1.9% of the total wealth. So before I go into the numbers, I'll go through something called the Gini coefficient, right? And what is the Gini coefficient, G-I-N-I? Well, it says here on Wikipedia, in economics, Gini coefficient, sometimes called Gini index or Gini ratio, is a measure of statistical dispersion intended to represent the income or wealth redistribution of a nation's residents and is the most commonly used measurement of inequality. It was developed by the Italian statistician and sociologist Corrado Gini and published in his 1912 paper, Variability and Mutability. I'll quickly go through what this is, this Gini coefficient. Basically, if the Gini coefficient is only goes from 0 to 1. If the Gini coefficient is 0, that means there's perfect equality in the country. So that's impossible, basically. If the Gini coefficient is 1, it means that one person owns all the wealth. So, and they measured this in percentage as well. So let's say the coefficient is 0.5, right? They'll say it's 50%. So the lower the coefficient, the more wealth distribution is fairer, the less inequality there is, right? And the higher the number, if it's like 0.6 or 60%, that means there's more wealth inequality. So before I go into the Fed data, just wanted to show you here the Gini coefficient by country 2019. You can see by the world map there that the lighter the color, the less inequality. The Gini coefficient is lower. The US is in the above 45%, which is quite high, as you can see. The lowest Gini coefficients seem to be in Europe, Scandinavia, right? Australia. And then you look at the numbers themselves. Let's start from the bottom here, where there's most wealth inequality. Lesotho in Africa, 63.2, or 0.632. But one interesting country that I saw here was Hong Kong. I didn't realize there's so much wealth inequality there. Interesting fact, considering what we're seeing in Hong Kong these days, all the protests and mayhem going there in that country, their coefficient is above 50, 53.9. You got Chile as well. That's supposed to be one of the wealthiest countries in South America, and it's at 50. Brazil, that's not surprising, 49. And then you go up towards the middle, and you find the United States at 45, which is, and you look at all the countries around the United States, they're all less developed countries. So there's am I saying the US should go socialist like the Scandinavian countries? No. As I said, I think the problem is the monetary system that favors the 1%, right? The easy money, big government, deficit spending, wars, right? Wars help the people who have a lot of money. It doesn't help the general public. So there you go. The least wealth inequality is in the Faroe Islands. Of course, there's only not a big population. You got Slovakia, Slovenia, Sweden, Czech Republic, Ukraine. What about the UK, where I am? Well, the UK is 32.4. So it has risen in the last 30 years or 40 years, the Gini coefficient in the UK. It's become more unequal according to some Bank of England data here, which I'll show you. You can see there the Gini coefficient has gone from around 0.25 in the 60s and 70s, and it's now, as you saw there, almost up to 0.35, the Gini coefficient. I try to find more data about the wealth distribution in the UK, but they don't have as good data as the Federal Reserve. So I took some notes here. I went through the Fed's, what's it called again? It's the distributional financial accounts, right? I'll put the link below in the description. It's very good data. So they've got data going back to 1989. So since then, the wealth of the top 1% in the US has gone up by 611%. The bottom 50 has gone up by 165%, which is good, of course. But it doesn't look like the wealth is trickling down, though. This trickle-down theory doesn't seem to be working, though, even though the wealth of the bottom 50% did rise. The other thing I wanted to look at is how the bottom 50%, and you can see here by this chart how tiny amount of wealth they have as a percentage of all the wealth in the U.S. It's that real little orange or a dark red line there. You can see how the top 1% is really growing. You can see how the green shaded areas there, they're not like the top 50%. They're just the top 10%, right? So these are the people who have benefited from this fiat currency, from the financialization, right? I wanted to look at how the bottom 50% had done under George Bush Jr., under President Obama, and now under Trump. And this is what I found. Under President Bush, the proportion of total wealth of the bottom 50% was 3.4% when he came into office in 2001. And then when he left, it had gone down to 1.4%. So, of course, the crisis of 08 destroyed a lot of wealth. And it made a lot of Americans worse off, 50%, the bottom 50%. What about under Obama? Well, when he came into power in 2009, took over Bush, presidency from Bush, it was at 1.4, but it dropped to as low as 0.3%. I think 2011, 2012. But when he left office in January of 2017, it was back up to 1.4%. So it wasn't a great performance. People didn't really improve their lot, the bottom 50%, right? So what about under Trump? What's happened now? Well, when he took over, it was 1.4%, and now the latest numbers show that it's up to 1.9%. So we have to give him credit for that, right? That he's been able to increase the wealth of the bottom 50%. I also wanted to compare what was going on 20 years ago in terms of the wealth and the bottom 50 and the top 1%. So in 1999, the bottom 50 controlled almost 4% of the wealth, 3.9%, and the top 1% controlled 28.6%. And right now, the top 1% control 32.4% of the wealth, and of course 1.9% for the bottom 50%. What about the stock market? And that's why Donald Trump wants to keep the stock market so high, because he knows that the stock market has become so important. And again, the data from the Fed shows me that in 1989, total wealth was at $20.4 trillion, and the stock market wealth was at $2.05 trillion. So it was 10% of the wealth. The stock market back then, the Fed calls them corporate equities and mutual fund shares. What about now? Well, total wealth right now is $107.13 trillion, and the total in the stock market or corporate equities and mutual funds shares is 25.5 trillion or 23.8%. So that's what's going on. Do I think President Trump is going to succeed in riding the ship, in being able to redistribute the wealth through this trickle down that he thinks he can do? Well, I don't think so. If you look back to 1989, the trickle down hasn't worked. The top 1% and the top 10%, they've got even wealthier. They've got a lot more as a proportion of all the wealth. As you can see, the bottom 50%, their proportion of the wealth is halved from 3.8% in 1989 to now 1.9%. So, and the other problem is the debt. The only way to keep the stock market going is the debt, right? And the Federal Reserve buying that debt. The government also needs to issue more debt, or else the Federal Reserve will buy all the debt in the markets. The other problem as well for the US is all the foreign holders of debt, especially the Chinese. And what's going on right now with China, right? China could very well dump a lot of their treasuries and you could see interest rates spike. Before I go and look at the markets and what they're doing, let's just quickly look at household wealth and how it was affected back in the end of last year when the stock market was kind of collapsing, right? I think it dropped 20%. You can see there that the top 1% held 33.8 trillion of wealth in the third quarter of 2018. And then by the fourth quarter, that had dropped to 31.8. So it dropped 2 trillion. You can see there, it's noticeable the move there in the wealth, but you can see now that it's picked up again because the Fed's come to the rescue of the 1%. That's who the Fed works for. It's government. So that's who the Fed works for the 1%. And I think Trump is on board with the Fed. It might not seem that he is, but at the same time, he's trying to throw a few crumbs to the bottom 50% so that they stay happy, right? But as you can see, a lot of those countries with the high Gini coefficient, there's a lot of trouble in those countries. Look at Hong Kong, look at Chile. US is getting close to those levels, even though it's still below 50. So let's look at the markets now. It's 5 to 9 a.m. London. Markets didn't do much yesterday. You would have thought that stock market would have rallied on Trump's speech, but it didn't really do anything. I think the NASDAQ was up a bit. Gold and silver didn't really do much. They were fairly weak early on. Right now, spot gold is at $14.60, up $4. Range has been $14.55 to $14.63, so a little stronger precious metals. Silver is up 11 cents or 0.2% at 16.87. Range has been 16.99 to 16.74. The Dow is down 53 points at 27,640. So 0.2%. S&P back below 3,100. It got above 3,100 yesterday, new all-time high, but didn't close above that level. We're at 3,085 right now. NASDAQ 100 down 20 at 82.45. Notice that there's a tweet from a journalist in China who people say is like a mouthpiece for the president of China, and he criticized Trump for what he said. He said that there were lies, what he said about China, right? Well, maybe it was because Trump called them cheaters. So anyway, so that hasn't helped the trade optimism for the stock market. Currencies, sterling pretty steady, virtually unchanged, 128.35. Same for the euro, 110.08. Dollar a little firmer against the yen, 109.13. Dollar back above 7 versus the yuan. It's at 701.70. Crude oil down a little bit here. We're back below 57 in WTI and at 61 in Brent. The 10-year yield is at 192, so a little weaker than yesterday. It's dropped a few basis points. And what about the situation in Hong Kong? Well, the Hang Seng Index is down another 2%, 500 points. Here's, just to finish off here, a chart of the Hang Seng. It topped about a week ago, and it's now coming down. Looks like a head and shoulder. We'll have to see what happens there. President Trump, speech to the Economic Club of New York, or the 1% Club. As you saw, the people involved in that club. He even made a joke. He said, because he was going to talk about how the stock market has done so well since he's become president, he said, I know most of you don't look at the stock market, and he kind of smiled, right? So there you go. It's difficult to see a way out of this predicament for the U.S. Of course, I'd like to see President Trump be able to equalize things for the bottom 50%. But just looking at how things have worked out in the last 30 years under the same current regime of fiat currency, central banking, inflation, which is getting even worse, I can't see the situation getting better. So even though I'll give him credit that things have improved for the bottom 50% under his watch and for a lot of people, right? If you enjoyed this video, make sure you hit the like button, subscribe to the channel if you haven't yet. Make sure you also hit that little notification bell above to be notified of all my new videos. And you can also follow me on Twitter, Steemit, and on DTube. I wish you all a great day. Take care. Bye.